heralding a new future for digital assets. The Intercontinental Exchange, or ICE, owner of the well-known New York Stock Exchange, or NYSE, has come forth to reveal their collaboration with Starbucks, Microsoft, and others on their entirely new crypto-centric platform called Bakkt. According to the announcement that launched Bakkt, the new ecosystem is expected to include federally regulated markets and warehousing, along with merchant and consumer applications. That means that Bakkt will use already existing laws and regulations to provide their investors with the digital investing services needed to put aside fears that any might have about the cryptocurrency industry. Having the type of backing that it has, Bakkt has easily been one of the biggest pieces of blockchain news this year. Some state that the release of Bakkt is the breakthrough we've been looking for to enable Bitcoin to become mainstream, and that it could have a significant impact on the cryptocurrency market as a whole by easing the way into the market for new investors. With Starbucks using Bakkt to accept Bitcoin for in-store purchases, and with Bakkt scheduled to be released as early as this November, this new platform is certainly exciting news for this industry. But what are the implications here? Just like the Bitcoin ETF, do the ends justify the means? Are we once again sacrificing the principles and ideals that Bitcoin and blockchain were founded upon for a quick gain? After all, as we're a month away from the anniversary of Satoshi's white paper, which was clearly released in response to the circumstances that caused the 2008 financial crisis, should Wall Street really be the arbiter of our future? If nothing else, let's just take some time to cut through the hype, the BS, and the overblown predictions and really look at this for what it truly is. If Bakkt is going to play such an important role in the upcoming years for this space, you deserve to know exactly what that means and how it will affect us going forward. Essentially, is this 2 steps forward or 2 steps back? Sorry, I had to. All right, let's get into it. Welcome to ReadySetCrypto. This is your brain on blockchain. So before we get moving, I just want to briefly mention that Doc is giving an advanced class on fractal energy trading. Doc has been trading markets for 2 decades, and this is what he refers to as his masterclass, or really the culmination of his trading experience distilled into a 5-hour class. In addition, this is the first class we're giving that has a coaching element added on for those who want it. So you'll get to talk with him live and ask your questions about trading. I'll link the class in the description below. Alright, so let's kick things off by talking about what Bakkt is really doing. First, they will follow already existing guidelines. The team tweeted about this when they stated the following: Bakkt uses the existing, time-tested, regulated futures market infrastructure to introduce physically delivered Bitcoin and warehousing to global markets. All aspects of the existing futures market will, for the first time, be part of physical delivery and warehousing of Bitcoin. Second, they've announced their first Bitcoin futures contracts and have described them as follows. Our first contracts will be physically delivered Bitcoin futures contracts versus fiat currencies, including USD, British pound sterling, and euro. For example, buying 1 USD BTC futures contract will result in daily delivery of 1 Bitcoin into the customer's account. So this is a good way to get physical Bitcoins pretty quickly in 1 day, while falling into a well-known regulatory regime. Futures contracts are regulated by the CFTC and have clear rules. Also, Bakkt is owned by ICE, and they have tons of futures trading already, so it's something they're used to. And finally, institutions trust ICE and the CFTC. Third, their initial focus will be to support institutional investors. They made this clear in a tweet that read as the following: while there are many aspects of Bakkt that will continue to develop and share, our initial focus is supporting regulated institutions and serving customers in this emerging asset class. Connecting the dots, Bakkt may be a far bigger thing for this space than what we've been led to believe. All attention has been focused on the pending Bitcoin ETF, and yet there's been an awesome solution to get institutional investors on board already being developed. Bakkt is targeted for launch in November, pending CFTC approval. I haven't seen much discourse to that point, so likely it's much more assured than the pending VanEck SolidX ETF application with the SEC. The date I keep seeing for launch is November 5th, but I'm saying that's hearsay until we get an official date. So put simply, Bakkt plans to tackle how digital assets are bought, sold, stored, and spent in a safe and efficient way. ICE wants to transform Bitcoin into a trusted global currency with broad usage, and Bakkt is their attempt to spark that transformation. ICE is positioning Bakkt to bring digital assets to the mainstream, and their efforts will likely open up the possibilities for the first SEC-approved Bitcoin ETF, should the VanEck SolidX ETF application be denied. After all, the SEC has denied previous ETF applications on the grounds of market manipulation and lack of market infrastructure. As Bakkt is addressing both of those, it allows a prospective ETF to be both trusted and efficient. As they've stated, they're starting with a proven framework that underpins exchanges, including a consistent regulatory construct, transparent, efficient price discovery, and an institutional quality pre- and post-trade infrastructure. Furthermore, Bakkt has said its exchange will not allow Bitcoin to be traded on margin or leverage, and that they want to establish its focus on finding a trusted price formation. Kelly Loeffler, CEO of Bakkt, said that a critical element to price discovery is physical delivery. Specifically with our solution, the buying and selling of Bitcoin is fully collateralized or pre-funded. As such, our new daily Bitcoin contract will not be traded on margin, use leverage, or serve to create a paper claim on a real asset. She continued, "This supports market integrity and differentiates our effort from existing futures and crypto exchanges, which allow for margin, leverage, and cash settlement. Coupled with a secure, regulated warehouse solution, you can begin to see how this market infrastructure can help more institutions and consumers participate in this asset class." So this makes Bakkt inherently different from other institutional Bitcoin markets that have opened in the past. Bakkt will actually trade Bitcoin and will not just speculate on its price movements. And that's incredibly important and very good. What's interesting is the Bakkt platform will function as a second layer protocol. As you might know, the Lightning Network is a second layer protocol as well, meaning that it is tethered to Bitcoin, but functions both independently and in conjunction with the main chain at the same time. Bakkt has announced that their platform will function in a similar manner. Kelly Loeffler spoke of the platform stating, "Our system would operate on a chain above the blockchain, and we'd keep our own omnibus ledger apart from the blockchain." Now, if you haven't watched my 2 words video, I'll link it in the top right. But for those who have, omnibus ledger is a code word for commingling, essentially the pooling or combining of client assets into a single fund or investment vehicle. We'll get back to why that's controversial in a bit. Anyways, the Bakkt platform is expected to attract high amounts of usage. Between the platform's many clients, there will be thousands of transactions per day. While the money remains within the system, it can be transferred between clients, similar to opening a payment channel. Much like the Lightning Network, these transactions do not need to be recorded to the blockchain. Bakkt acts as a scorekeeper, monitoring the balances of each client. It is only upon the removal or addition of funds entirely from the platform that the final balance data is recorded to the blockchain. Essentially, the platform acts as a protocol operating on top of the main blockchain. Although it may act independently, it is still anchored to the main chain, benefiting from the immutability and security afforded by the Bitcoin main chain. Now, the ICE clearing US will have to be connected to the Bitcoin blockchain periodically to anchor its second layer trades to the base layer, i.e. the actual Bitcoin blockchain, introducing new cyber risks as they interact between layers. The thing is, if the Bitcoins in their second layer are not digitally escrowed, hard to borrow assets like Bitcoin get borrowed multiple times. Now, the big revelation a couple days ago was that Bakkt's contracts will be one day physically delivered against fiat. But what does that actually mean? Well, standard practice for an exchange is to hold legal title to the contents of its customer's account, whilst maintaining that beneficial ownership remains with the customer. Essentially, the exchange holds the private keys. This still constitutes physical delivery. This is why a lot of people have compared Bakkt to Coinbase, as they're not that different, other than Bakkt's massive exposure and trust with Wall Street. Furthermore, it's not one-day delivery, despite what they claim. It's creation of warehouse depository. Essentially, the crypto won't be in your name, it'll be in the depositories. So crypto balances can be lent out, and both you and I can have claims on the same crypto, doubling float. As I covered in the 2 words video, this is called rehypothecation. While the exchange claims to back each Bitcoin with a real Bitcoin, investors on Bakkt are essentially buying IOUs. That IOU claims that Bakkt will let you withdraw your Bitcoin in the future, but Bakkt still owns that Bitcoin until you cash out. So what's bad about this is that there's a lot of counterparty credit and cybersecurity risk with the ICE Clearing US, which is guaranteeing all physically settled Bitcoin futures trades. I'm worried that the ICE Clearing US may become the biggest honeypot for cryptocurrency hackers, which brings back all sorts of Mt. Gox fears. ICE describes their entity as its central counterparty for all ICE-cleared Forex futures trades. In other words, ICE is not creating a separate clearinghouse for cryptocurrencies and is instead commingling them with other asset types in ICE Clearing US, which is one of ICE's smaller existing clearinghouses. It's critical to understand that the counterparty credit risk implications of fractionally reserved off-chain cryptocurrencies, both for the issuers of such instruments and the investors exposed to them. Fractionally reserved Bitcoins are Bitcoin claims created off-chain that aren't 100% digitally escrowed with real on-chain Bitcoins. The issue is that economic confidence in Bitcoin itself can be lost. Even if fundamentally there's nothing really wrong, paper Bitcoin can crash real Bitcoin. Manipulation can happen. Bitcoin is an equity-based asset that Wall Street cannot control directly. Bitcoin has no lender of last resort, so loss severity for fractionally reserved cryptocurrencies, aka cryptocurrency substitutes, will be much higher than normal in run-on-the-bank stress scenarios. Holders of on-chain Bitcoins would benefit from a short squeeze in such scenarios, but anyone exposed to fractionally reserved off-chain Bitcoins would incur high loss severity. Look, Bitcoin is a very different animal from the equities we're used to. It's much riskier to create unbacked claims to it versus other financial assets. Regulators, auditors, and portfolio managers can easily track assets on a blockchain without exposing the owner's private keys. But requiring a third party to hold the owner's private keys introduces cybersecurity risk where it would not otherwise exist. Cryptocurrencies are digital bearer assets, and whoever controls the private keys owns the asset. Owing to this, it's critical to update US securities laws to broaden the definition of qualified custodian to include the blockchain itself. So hopefully this makes sense that it's not exactly a criticism of Bakkt itself, but rather the principles and regulations that allow these practices to exist. I think a good summation of what needs to happen was the conclusion of a letter recently sent to the SEC. Several prominent leaders representing nearly every aspect of both traditional and cryptocurrency finance jointly submitted a letter to the US Securities and Exchange Commission, or SEC, urging the regulator to modernize its methods. They stated, "We believe that the current SEC rules surrounding custody do not reflect the risks inherent in managing digital assets and do not use the technical strengths of the technology. These technical strengths have the potential to lead to a stronger, more robust custody environment. To better understand these possibilities, to build to strengths of technologies, and to not harm its advantages, we recommend that the SEC engage with those who are experienced with technology, such as cryptographic engineers, software developers, Bitcoin exchanges, smart contract designers, blockchain developers, and existing digital asset managers to ensure best practices are implemented." In summary, best practices regarding custody of digital assets should incorporate some of these new technologies to achieve transparent, auditable, and provably solvent funds. The new tools are in many ways better for this asset class than existing tools, and achieve the same goals without introducing risks that would not otherwise be there. So hopefully this drives home why what Bakkt is doing is controversial. Founder, chairman, and CEO of ICE, Jeffrey Sprecher, said that building a connected infrastructure would help build confidence in the crypto asset class on a global scale, consistent with the company's track record of bringing transparency and trust to previously unregulated markets. Of course, it's somewhat comical, if not concerning, for him to imply that Bakkt would bring confidence and transparency to Bitcoin, when those are literally the core principles upon which Bitcoin was built. But of course, I see his point. It's exposure that merits confidence and transparency just as much as the underlying technology. What good is one of the greatest inventions of our time if no one knows about it? Now, the main bonus, if it plays out that way, is that the market cap would be about to totally explode, which would certainly contribute to another bull run. And that's what has everyone who supports Bakkt so excited. There's no denying that Wall Street investment could be good for price movement. However, die-hard crypto believers are likely to feel that this is essentially the commercialization of cryptocurrency that will only serve to regulate it to the point of being nearly indistinguishable from fiat currency. Andreas Antonopoulos touched on this when he explained his thoughts on why ETFs are a bad move for Bitcoin, citing the potential for market manipulation as the main concern. He said, if there's ever a fork debate, which is likely to happen again in any cryptocurrency, then the fund that controls that Bitcoin now has a very large voice. Their shareholders don't. They don't get to choose which fork the fund is going to follow in a Bitcoin debate. We already saw that level of influence during the August 1st fork, user-activated software forks, Bitcoin Cash. Large custodial exchanges had a very strong voice in the ecosystem. They were able to decide if they were going to support or not on behalf of 10 million customers. An ETF will do that, and it will do that on an even bigger scale. So hopefully you get the picture here. Bakkt brings with it traditional banking practices that could put a lot of power and manipulation capabilities in the hands of the bankers, but it could also boost the market cap. However, aside from the market cap boost, Bakkt could really help with general adoption. It makes crypto easier to access, something that could really bring in more new investors, which is desperately needed if this space is going to expand. Anyone who wants crypto to succeed wants to see it widely adopted and provided as a payment solution in stores and services. Bakkt would raise crypto's profile and perhaps lead to more merchants worldwide accepting crypto. As well as that, Bakkt facilitates tokenization of more assets. The name even hints of the idea of everything being backed by crypto, and the tokenization of everything is an exciting concept. As I've talked about before, security token offerings, or STOs, would be a perfect fit for Bakkt. Art, real estate, and other forms of physical property would be digitized and sold as tokens, enabling regular people to invest in things that were previously only for the elite. All of this change spells more interesting ideas and innovation, more adoption, more real use cases, and more money in the space. But at what cost? How much of the core ideas behind the invention of cryptocurrency will be traded away to facilitate this new era of crypto? 10 years after Satoshi gifted us the blockchain, are we about to enter a new era of different principles and ideals? We'll have to wait and see, because there's not much else we can do about it. Like it or not, Bakkt and Wall Street are already on their way. So what do you think? Is Bakkt still a good idea for this space? Is it necessary? Is it inevitable? Is there no point fighting it? Let's discuss in the comments below. And thanks again for watching. And that's it for this video. Thank you so much for watching, and please consider subscribing if you haven't done so already in order to continue to see high quality cryptocurrency analysis and advice. Don't forget to hit the bell right next to the subscribe button in order to be notified when we put out a new video. Also be sure to watch some of our other videos and visit our website, where we've got more free cryptocurrency education, a free intro course, a free book, and a free newsletter. So definitely check us out. Thanks again for watching. This has been ReadySetCrypto, and I'll catch you in the next one. Cheers.